So originally for this week's video, I just wanted to talk about the rate hike that will be happening next year. However, the week had one more interesting thing going on, and that's Tesla broke its $1,000 per share price, bringing it to a $1 trillion company. So I thought for this week, why don't we group everything together, make it kind of like a new segment again, talk about Tesla, and then we'll discuss the rate hike that will be coming soon. Now, before we start, a quick reminder, if you haven't already, make sure you join our private Facebook group. In there, you'll be able to ask questions if you want, and also we have a lot of members in different fields who will be more than willing to help you out. So if you haven't already, check out the link in the description below. Now, without further ado, let's get started. So first, let's talk a little bit about Tesla and its huge surge last week. So last Monday, Tesla price jumped 12.4% to $1,024. They have gained $115 billion in a single day, officially making it a $1 trillion company. Now, it's the very first auto company to do so. Not only that, if you look on the screen right here, it has the market cap of the next 10 automaker add together. So it's a huge, giant company. Now, why such huge jump in market price? That's because Hertz, the rental company that's very popular in US, have announced that they will be adding 100,000 Tesla to their rental fleet. Now, these additions will be available for US and Europe by 2022, and according to them, beginning in early November and expanding through year end, customers will be able to rent a Tesla Model 3 right away. The deal size have not been confirmed, but media estimate this to be around $4.2 billion. In the same day, Hertz share price have spiked 10% on announcement as well. Tesla now sits at a PE ratio of 332, which is absolutely insane because it is 10 to 15 times more than all the other top automakers have on average. Now, one thing do keep in mind is that Tesla, even though it is an automaker, it is classified as so, it is not valued as if they are one. They're more looked at as a tech company. So this is why they have such a crazy PE ratio. Still crazy for a tech company, but it explains why people are still willing to buy in given such a high PE ratio. So next, let's talk about what do we make of this news and where Tesla go from here. Now, if you remember last year about April or May-ish, we have made a video on our top 5 stock pick that you should look at to consider to add to your portfolio, and Tesla was one of the 5. And in there, we have said that Tesla out of all 5 is the most volatile one, most unpredictable one, but has the highest potential to be a hidden dark horse. So this is why throughout the year, we have ourselves pay more attention to Tesla's development anyway. So this is why I want to spend more time to talk about our opinion of the company itself. So first, we're going to address some of the questions or concerns that people have raised about this company online, and let's do a little bit of fact check together. So number one that people are talking about is production capacity. Now, Tesla have developed 627,000 cars so far, 241,000 of which comes from third quarter alone. Now, if we use these kind of number and project forward, by end of this year, it would assume that Tesla will be able to produce about 900,000 cars. So 100K will be more than 10% of the total annual capacity. So looking at this, a lot of people were questioning why then sell more than 10% of your capacity to a rental car company, because historically, they usually will have discounts, so you will earn less when there is a lot of retail customers still waiting for their Tesla. If you were to go online right now and order one in US, you would have to wait until June of next year to get your Model 3. So why sell it to them and earn less profit? Well, actually on that point, Elon Musk came out and clarified that Hertz will be paying full price for every single Tesla that they have ordered. In Tesla's perspective, it has made no difference for them. Seemingly, they would be earning around the same revenue anyway. Now, then on the flip side, why would Hertz want to buy 100,000 Tesla if there is no discount? Well, there are really 3 reasons on why they may want to do so. Number one is that the price they're paying per Tesla is actually before the price increase that just happened this year. So retrospectively, they have actually got some sort of discount because they're paying the old price. Now, number 2 is that even though they might be paying full price on the Tesla itself, they might be able to skip out on a lot of the fees like delivery fee or checking fee, etc. that other retail customers would have to pay. And lastly, which is the most important one, is that there is the new infrastructure bill that is waiting to get passed. In there, it will give a 30% tax credit for qualified commercial electric vehicles. Now, there are no specifics on what actually qualifies as a commercial electric vehicle, but this deal would likely qualify for Hertz as well. So then for the $4.2 billion that they pay, they would get 30% back, which is about $1.26 billion. So that's a massive discount. And that actually brings the Model 3 number to as low as the Toyota Camry. So this is why in Hertz and Tesla's perspective, they don't need to give any discount, or they don't care about any discount, because just from the bill and the other two reasons alone, they have a massive saving anyway, and it's really good for business and great for both sides. Now, moving forward, another counterpoint people were arguing about is that why sell it to a rental? Because for rental, it's going to cost a lot of resale, maybe 2 or 3 years down the road, and that's going to cheapen the brand, especially if the brand is luxurious like Tesla. So yes, historically, even though rental companies will sell their rental vehicles after 1 or 2 years when they have reached 15 to 50,000 miles on the car, and it will likely cause a huge influx of second-hand Tesla into the market. However, looking at the fact that second-hand Tesla usually hold up quite well in value, and the fact that chip shortage is still going on and likely to last all the way until 2023, the second-hand car market, if you look right now, is absolutely insane, which is why a potential lower resale value is probably not a concern for Hertz and Tesla at this moment. So this is why on paper this is such a great deal for both Hertz and Tesla. Everybody wins, everybody gets what they want. So let's wrap up by talking about Tesla. Where do they go from here? What are the strengths and weaknesses that we should be looking at? Now, in the old video that we talk about, Starlink plus Tesla software is a very, very powerful duo and combo that they have on their hands. And for me personally, when I look at a company, I value their big picture, or what I call their ecosystem, a lot more than short-term technical analysis. This is why in that video, all 5 companies recommended have great big picture. For example, Nvidia is one that we talked about. Their focus on data center and the ARM deal is why we also really like Nvidia, and we bought into it a year ago. Another one was Apple, with last year their focus being on the M1 chip. We thought that the move away from Intel was very, very smart and powerful for the future expansion. And if the chip does perform well, which we all see right now it does, it's gonna be such a powerful tool for Apple in the future business expansion. So let's go back to Tesla. I do believe it's a matter of time that they would integrate fully with each other. It's just something that I think will happen naturally, because both businesses are very good complement to each other. Think about how many cameras are on a Tesla and how much things are going on within the car. People, playing music, for example, people could be watching something. All those require internet, satellite, and if all those data are put together, streamlined through Starlink, that's a vast amount of information Tesla will be collecting on the consumer and the surrounding every single day. Which is why I also think the 100,000 car deal is a huge thing for Tesla, because that provides a great advertising opportunity. And also, it doesn't matter if it's rent or bought, the more people drive Tesla, the more Teslas on the road, the more data Tesla is going to be able to collect overall. And lastly, keep in mind that just because Hertz is the first company to announce so, they will not be the only company. I would imagine other rental car companies will be jumping onto this, and they might order some Tesla themselves to add to their rental fleet. So personally, I think this is a start of something great for Tesla. But next, we also have to consider some of its weaknesses that might bring fluctuation to stock price that you need to be aware about. So in my opinion, there are 3 major unknowns or variables. Number 1 is Starlink itself. Even though they are 2 companies, when Starlink is fully launched and be commercialized, I do see that anything happening to Starlink could potentially affect Tesla price or vice versa. And number 2 is crypto, right? We know how Elon Musk loves dabbling into the crypto, and also Tesla holds quite a bit of Bitcoin. Any movement in the crypto market is also going to bring volatility to Tesla's share price. Now, number 3 would be other EV companies catching up, or drastic breakthrough like hydrogen fuel, which Toyota is going all in on. So if that works, and that proved to be a lot more economic or efficient than EV, then that's definitely going to bring Tesla's share price down. So that's also something we need to think about and keep in mind. Alright, so that's enough about Tesla. Let's move forward and talk about rate hike, which is very likely to happen next year. So on Wednesday, just came out, Bank of Canada, they announced they will stop their bond buying program. Now, just before this announcement, in total throughout about 2 years since the pandemic, Bank of Canada have increased their bond holding by about $350 billion in total. They were in the beginning adding $5 billion of bonds a week. They have lowered 3 times throughout the years and bring it down to $2 billion a week right before the announcement. Now, the timing of when they stop bond buying is extremely important because the moment they announce they will stop the bond purchase, next cycle will happen, which is tightening the policy. What it means is rate hike. And indeed, Governor Tiff Macklem had mentioned that the rate hike will be accelerated and could be as early as April 2022. Now, we have actually talked about this in our older video. In the beginning of the pandemic, we're saying that government is underestimating the power of inflation. It's definitely not the 1.5 or 2% that they seem to quote. It's way, way higher than that. And we said that once the inflation pressure hits, they will have to react heavily to it. And so the initial timeline of 2023 rate hike schedule is not believable. We actually said in the older video that it might happen as early as end of 2021. Now, obviously, this is not the case. However, they still moved the rate hike schedule 1 year ahead. So everyone is expecting it's going to be a 3 to 4 times of rate hike for next year, probably 0.25% at a time. So it's going to bring our prime to 3% or 3.45% by end of 2022. So let's talk a little bit about the mortgage itself because I get a lot of questions on this. Just because a rate hike is coming, it does not necessarily mean that a fixed rate is automatically better than variable rate. In order to determine which one is better, you really have to consider a couple of things. Number one is what is the fixed rate that's actually being offered right now compared to your current variable rate. Because rate hike takes time, they're not going to bump up the rate all at once. It's going to be a small increment, likely 0.25 at a time. So if currently there's a big gap between the variable rate and the fixed rate, you may not necessarily be behind if you stick with a variable rate, and even if the rate were to go up. You're only going to be behind if the weighted average of your variable rate for your remainder of the term, let's say 5 years, is higher than your fixed rate on average. However, this is unpredictable because we have no idea what kind of rate hike the government will be doing. But if you really want to calculate, you can assume it's going to be 0.25 every time, maybe 3 times next year or 4 times next year. And then maybe ask your mortgage broker to calculate the weighted average, which one will be better. Now, the next thing to consider is also what is your plan with your current property? Do you plan to stay in there for a long time, or you might be selling it sometime in the future? You should really only fix for however long term you want to be if you're very, very sure you're not moving away. Now, on the topic of fixed penalty, I made an old video talking about something called blend and extend, where you can potentially get out of fixed rate mortgage. Now, while I have feedback from subscribers telling me it actually helped them get out of their mortgage, others have also told me that some banks no longer allow this. So I would suggest you do not use the blend and extend as a backup. Even if it works now, it may not work by the time you really want to sell it. So keep that in mind. Now, lastly, to consider very important is your comfort zone. Some people is very good with variable rate. They don't really care if rate goes up or down. They can handle those kind of fluctuation. But for other people, they cannot handle not knowing something is going to happen or not. So in that case, maybe just take a fixed rate because it's so much easier on your mental, and you don't want to be stressed every day checking to see if government is going to increase the rate on you. But no matter if you're variable or fixed right now, highly recommend you look at your budget currently. Whatever mortgage you're paying, add 1 or 1.5% to it just so you know what the cash flow is gonna look like potentially. Now, you want to do this even though if you're fixed right now, because your fixed rate will come to a maturity. When it's mature, you will have to renew at a much higher current rate anyway, so it will still affect you. So this is why you really want to find out and see how much room you have with your mortgages. And in the unfortunate event that you're very, very confident that when the rate hike hits, you will not be able to handle the new payment, maybe, just maybe right now is a good time to think about selling and maybe buy a smaller unit, maybe go rent. If you don't see any way to handle those kind of payment, start making plans right now because you still have time. So to wrap up, some final thoughts on the rate hike and maybe real estate market and the economy itself. Number one is, are we ready for such a hike? In my personal opinion, absolutely not. Now, I know Bank of Canada said they will wait until recovery is complete before they rate hike, but I just don't see the economy recovering by April of next year. And also, market is very nervous right now, so rate hike next year, it's gonna greatly affect your investment portfolio, so you need to pay more attention to it. And finally, in terms of housing prices, will rate hike bring it down? I would say the first 4 hikes will not do much to the real estate market because that's just a 1% increase at most. And for most people, they're more than okay to handle those kind of payment. And like I said, lots of HELOC they can fall back on for now. However, if the rate hike continues and it brings the interest rate to 1.5% or 2% higher than what we're seeing right now, which means everybody is going to pay 3% or 3.5% above, yeah, that's when we're going to see more downward pressure on housing market. So while rate hike is probably going to slow down the market and make people nervous, I don't see a huge fluctuation and drop in sale. If there's any price drop, it will have more to do with the fact that there's FOMO happening early this year, pushed the market price way above, and now it's too high and not many people want to afford this such expensive home, and so not many people are buying, and the price is just readjusting a little bit back towards where we were at the start of the year. However, everything I say so far is just my opinion. I may be totally wrong. So if you agree with what I'm saying today, hit the like button for me so I know. If you don't like what I'm saying, hit the dislike button twice. What I want to do next is hear from you what you think about for both events, Tesla and rate hike, especially the rate hike. What do you think will be the impact on our housing market or economy? Let me know in the comment down below. And if you like these kind of videos, I do upload them 8:30 EST every Tuesday. So make sure you subscribe to the channel, click the bell button to get all the notifications in the future. Alright, this is Jacky. I hope you found this interesting. I'll see you next week. Bye!